Good morning, good afternoon, and good evening, everyone in his time zone. Back to the DebtCast, the first in its kind in a very much important industry. There is a podcast and there is a DebtCast. The DebtCast, part of any economy, any business transaction, back to the audience, and as promised, and as it is a vision and it is a mission of the DebtCast by AW Holding. Over the 28 years, what we have done the debt collection, we have done the legal debt collection, we have done the cross-border debt collection, and we kept innovating and upgrading according to the market needs. So we take it forward to the business advisory and risk management, and we develop it further to receivable management till we end up in a full-fledged credit risk supply chain to prevent and predict and mitigate and manage a risk. Always, it is a belief, as much as there is business, there is complex. And as much there is a complex, there is need for completely different type of tools and ways and methods. And as such, we end up with a supply chain start with an advisory part. Right after the compliance and the onboarding, we can answer if it's collectible, not collectible, short or medium or long term, if it's domestic or a cross-border, if it's legal or amicable. Upgrading that to receivable management, upgrading that to debt collection, to legal debt collection, to cross-border debt collection. Last year, what we decided, according to the new market needs, we have done an advanced credit risk supply chain. And we believe the first driver, not the advisory and the receivable and the collection and legal collection and the cross-border. We find it that the first driver should be information, credit re-benchmark, and credit insurance. To my audience today, we will be exploring the credit insurance. So it is not always to look at the risk and how to collect, how to legal collect, and how to cross-border collect. So prior to that, there is an industry. We know about it, and it is our pleasure today to share with the audience this industry, the credit insurance. And as such, and aside of the DebtCast, we have done, and as such, today we have the honor to sit in Malakut's office, one of the credit insurance brokers, one of the leading names, and we will be talking and exploring and deep dive and taking the audience goals and objectives to challenge and to explore more by two experts. Vanessa, how are you today?
I'm very good, Mr. Ayman. How are you?
I'm fine. I'm not good to introduce people, and I believe people can introduce themselves better than I do. So the audience needs to know who's Vanessa and what her professional background. Please.
Absolutely. My name is Vanessa Balaji. I have been in the credit insurance industry for 3 years now. I started off in new business, and a year ago I started off selling credit insurance policies within the firm, but our role comes a lot further than just selling in credit insurance. Especially, it is really true to its nature when I say I am a business development manager, because you have to develop this type of a business, especially in credit insurance. Prior to that, my background is I have a LLB and an LLM.
Some of my audience asking me what is this LLB and LLM? Yeah, please.
I have a bachelor's in law and a master's in law.
So we're sitting with a lawyer. So let us explore more how legal link to this industry. Yeah.
Absolutely, and I specialize in actually maritime law. And out of that, one of the main subjects that were covered was actually marine insurance, which is how I got my interest to enter the insurance industry. And I started off as a claims handler for P&I clubs.
We're gonna discover a lot today. Okay.
I think so. So after that, I got into credit insurance. Clifford always says that people don't get into credit insurance on purpose. They just somehow end up there and they never leave. So it's been 3 years and he's right.
We will come back to this statement. Keep it in mind.
I
Carry
will.
on. Yeah, please.
So it's been 3 years now that I've worked in credit insurance, and as you know, it is a very dynamic industry. At the same time, in UAE, not being a market like the Europe and the Americas, there's a lot of awareness that needs to be put out. And
We will come to that, but now the audience need to know Vanessa. So I believe we know by now Vanessa as a lawyer and maritime and credit insurance, and in 3 years we will come to those to deep dive and figure out more about it.
Absolutely.
Welcome to that DebtCast today.
Thank you, Mr. Ayman.
Thank you. She said Clifford told her something. So who's Clifford?
Yeah, I've been in the industry for the last 19 years. So I came here to Dubai in 2005, hotelier for 13 years. Did not ever dream that I would come into the line of, trade credit insurance. But here I am, 19 years later, still enjoying the line. I'm really passionate about it. And today I work for Malakut. It's a landmark. It's 10 years now with Malakut.
10 years.
10 years, yeah.
Okay, and total?
19. So prior to this, I was with.
So one more to be 50-50 then, out
Correct.
of your total journey.
Correct.
Interesting.
Correct.
Interesting.
So yeah, today I'm with Malakut, but prior to this, I was with Trades for 9 years. One of the leading insurers. Yeah. So yeah, here I am. Responsibility is to head the division for Malakut, the TCI division, in terms of business growth and retention of the portfolio.
Welcome to the DebtCast
Thank you.
by AWH. Fine. Credit insurance, a terminology and an industry. I believe there is a considerable portion today my audience would like to understand more.
Mm-hmm.
And even I would say that over the 28 years, dealt with more than 10,000 clients. Let me zoom into the region, the MENA region and the Middle East and the GCC in particular. If I get a sample, a random sample out of 10 corporates, I may just find 1 to 2 knows about the credit insurance. So let me ask you, and to pass to the audience, what this credit insurance industry, how it works, since when actually it has existed, and how it works, and who are the parties in that?
So if you look at trade credit insurance, it started with the ECAs of every country.
Fine. I got audience, they asking what is ACI, even if I know, they'd like to know. So let us try just to use the professional terminology with its explanation so people can understand more.
True.
One of the main goal to this DebtCast today, it is a DebtCast. What it has to do with collection, with the insurance, there is a link. So in fact, we need to understand in first place, what is this credit insurance? Since when it's existed, Clifford?
Okay, it's over 100 years for sure. Okay, how did it start, right? You have corporates who sell domestically, and then they sell, export. Now, when you export, you do not know your clients. So every country had an export credit agency, okay? And these credit agencies helped to get information and helped to ensure the receivables of the corporates so they could reach out to different markets in the
When you
world.
said help, what type of help are you talking about?
The main issue is a sale is only complete when you get payment.
This is
Right.
one thing I would like to underline, repeat it because it is a big motto and I'm a big fan of this statement. What is this statement?
A sale is only complete if the payment is made.
So there is no sales. So salespeople need to know that there is no sales till what?
Till you get paid.
Till you get paid. So the impact to the insurance then, the industry, so 100 years and
Export credit
agencies
yeah.
in different regions.
Yeah, yeah.
You said they helping.
They're helping to the corporates to reach out to buyers in different parts of the world to help them to grow freely, ensuring that the payment is made.
Grow freely.
And in case the payments are not made, the export credit agency will indemnify 90% of the outstanding.
Very much important information. Audience, try to concentrate here. You said in case, but as an expert, I would say there is a considerable percentage not paid.
There's every possibility. No company is too big to fail.
Okay, yeah.
Right? And hence, you have to protect your receivables.
Yeah.
A lot of people have this conception of, I've been dealing with this buyer for years, I know him, I trust him.
Interesting.
Unfortunately, the reality is, these other buyers sometimes do not pay you.
So reality, let us look at the reality. A reality, like out of my experience, it is not some, it is a considerable percentage they won't pay. And there are a lot of reasons and we will deep dive, but back to the industry. So the export credit agency helping to grow and to insure and to take a responsibility of covering that risk.
Correct. Correct.
Fine. Then, the good side of the story we don't want to talk about. We will talk about the part where it is a concern to the audience. So, where there is no payment in place and where is the credit insurance industry involved in this? So, what more as a credit insurance we need to know today from you in that terms?
So if you look at how businesses do business and they want to grow, yeah, the main focus of any business is to expand, right?
Grow, expand.
Yeah. Finance plays a very important role
Finance.
in every company for working capital and cash flow, right?
Mhm.
So this product started off from Europe. It's a very matured product out there in Europe.
Very much interesting. You said this product came from Europe.
Yeah.
Okay.
So it's originated out of there. And now what we are trying to do in the UAE or in this region is try and promote it. So for us, what we really have to do, because of the lack of awareness, so what we do as brokers is we...
No, let me hold a bit here. So still like trying to explore this industry, the credit insurance. So if I understand you well, so we're talking about the export credit agencies in countries, import and export, which is very much important to the economy, and the economy is very much important for all of us. So the credit insurance actually covering the risk and different type of risk. But we talk about a particular risk, which is the default risk, where I understand from Clifford that they would cover up to 90%.
Correct.
Thank you, Clifford. Vanessa, how are you today?
Very well. Very well.
Fine. So, why, in your opinion, and in reality, very much less corporates in our region knows about such an important industry and Clifford, what he said, that it gives you a way to expand, to grow, and so it is something adding value, looks to me from this. So why, in your opinion, it is not well known? As an expert, I'm sitting with thousands of clients. I said, if I stop or I take sample of a 10, only 1 or 2 knows about it. So why you think?
So that's
This-
a very good
yeah.
question, Mr. Ayman. MNCs usually.
My audience is stopping me and asking, what is NMC?
Okay. So an MNC is a multinational corporation, okay? And a lot of them are headquartered, well, they're Europe, Middle East, and Africa region. The headquarters tend to be in Europe, right? So either London or Paris. So they are already aware of this concept in that market. So that's why the MNCs over here tend to already have cover in place. And they're fully aware. They have group policies right from Europe trickling down to the rest of the region. But if we're talking about the SMEs within the region, as you know, especially in the Khalij, right? A lot of business, especially family-owned businesses and such, they work on relationship, they work on trust, they work on, their word. Because of that, people are very sure of their buyers because they've been dealing with them for very many years.
I totally appreciate your touching base the culture. So culture is really important. Dubai, it is not Riyadh, it is not Qatar, it is not Oman. So the culture. So today, Vanessa telling us that most of the companies operating here, they coming from background of Europe or state, they use, and it is one of their compliance. And the portion today you referring to where they don't know, and this is actually the audience question and my question in particular. So you said that the trust, so the tradition and the culture, they work with each other and trust. It is a reason, but my question is why they don't know about it. So there is a lot of corporates, a lot of SMEs, a lot of different category in this region. They don't know about the existence of such a solution. You know how many debtors we collected from in the 28 years?
Please.
I don't remember. It is a huge number. But always when we have a debtor is not a criminal or not an enemy. It is a person or a company. They get in default. So we have chats together, and sometime when we talk about the credit insurance, they said, is this something existed? How to get it? So back to the question, why it is not known, in your opinion?
So I think nowadays, I feel like a lot more people are exposed to these things because there is obviously social media, LinkedIn, there's a lot of campaigns. UAE has, well, we have our own ECA, our own export credit agency, which is at the Heart Credit Insurance, for example. There's a lot of push towards, generating more income, but in a safe way. People are slowly becoming aware of it. But it is also our responsibility as consultants and advisors to make the market aware, which is why we try and meet as many clients and prospects as possible to educate them on the benefits of the product, of what trade credit insurance is set to do. But of course, there is still a way to go.
Interesting, fine. Clifford, Malakut, since when it has existed? In the United Arab Emirates or in the Middle East?
Yeah, we set up shop here in 2009. Yeah,
So what initiative Malakut have put to, not to promote, that is not the right word, but to take an initiative helping the economy and the SMEs and the corporates to be aware of? So what initiatives been made since 2008, you said?
2009.
And 9.
Yeah.
So what initiative to go to the SMEs, to go to the corporates, to the market. So what initiatives you've made, Malakut have done so far?
So when we started off here in Dubai in 2009, it was more of an aviation broker with a little bit of employee benefits. As we grew, we introduced trade credit, which is extremely important for SMEs and large corporates here. This was a trading hub, was known as a trading hub, which is very quickly moving to manufacturing, okay, which is very interesting for us. We have seen a lot of demand from the time we started to now. As you very correctly put it, out of 10, if you speak to 10 corporates, only 2 would know about it.
Mhm.
But I think that's changing extremely fast. Now at least 7 would know about it. And that is purely because of word of mouth, what is happening, the risk in the market. And of course, apart from trade credit, we have also introduced different lines like DNO, directors of DNO. What is DNO?
So
Director and officer's liability.
Yeah. So what type of activity? So I'm sitting as an entrepreneur or a startup or SME.
Mhm.
Why you didn't reach me, and how you would reach me? So this is actually what I need actually to pass, to understand and to get educational session about this industry. There are entrepreneurs. There are seeds came a unicorn, but they don't know much about this important industry. So what type of activity you do? So you do any type of educational sessions, workshops, seminars, breakfast, round tables, as reaching out, what you usually do?
Actually, it's a good question because it depends what are you exactly looking for. So let me talk about SMEs, or let me talk about a startup, right?
Yeah.
The criteria for trade credit insurance are basically just 2. One is
I would love to come to this,
Mhm.
but in a bit. So there is an initiatives. I understand you do from time to time some gathering. Like last year, you guys have done like
Malakut Trade Forum.
Malakut Trade Forum.
Correct.
Yeah, and I understand you do some breakfast as well. So and you invite people.
And you have the right person in the room. Vanessa has taken the initiative, so
Okay, so this is what I'm asking.
Yeah,
like,
so Vanessa-
what Malakut have pay back to the society to explain and educate and explain more actually to this important solution. So we will ask Vanessa then.
Absolutely.
Yeah, Vanessa, tell me
Yeah.
what this initiative about.
So actually, from what I remember and what I've heard, from Clifford, it started a very long time, much before we started these breakfast things.
You know what, like he said, 100 years this industry existed, so I bet belong this region, and I need to understand how can we take all these models and custom it and localize it, as you said, and to apply it further, and our entrepreneurs, our investors, our startups actually get benefit of that. So the initiative, tell me the initiative when you took it, what is the goal objective, what is the outcome of it?
So long before we started the breakfast initiatives and the trade forum, business forum events, there was a period of time where one of our colleagues back in the day would call people on the phone, right? And not to sell to them, but to educate them of what credit insurance was.
I like this. So I don't believe it is sometime you need to put a sales pitch to anything. It is just to explain the adding value and not actually to annoy me, because if it's so the concept itself is something I like very much. So not to call to sell me something, because you know how many phone calls I'm getting a day?
Absolutely.
To an extent I'm not replying. So sorry for whoever I'm not replying with their calls. But you call to exactly explain.
Exactly. So that was what was being done. But of course, we have scaled up since then. The team has grown, and our capacity and our capabilities have also grown with it. So we started the initiative of a business breakfast, right? where we invite a select number of people from various kinds of industries, and we tell them a little bit about the products, our offering, and at the same time we also try and include some kind of an economic perspective, some kind of a risk perspective as well, so that they're more like well informed about what's happening in the region, in the wider global economy. So this is the kind of value add that we like to give potential prospects, or basically just anyone.
How many times you've done that?
So we've done the business breakfast a couple of times now, I would say 2 times, very successfully. Last year we had our flagship event, which was the Malakut Trade Forum. I remember you attended it. We had a very good turnout, and we touched upon some major pain points on the supply chain of sort of any trader, distributor, manufacturer, which was trade finance. Of course, access to financing is one big pain point for many people. We touched upon logistics. We touched upon receivables and the protection on those receivables, and we touched upon cyber risks, because in today's world, everybody is really focused on digitization.
So, audience, there is a list, not only the default risk list, but would you just repeat those to me?
Yeah, so the 4 pillars we thought where there's pain points in any supply chain would be 1, which is access to financing.
Financing, and I believe the other day we had some chat. One of the speakers always from the and the banking side.
Yeah.
Okay, interesting.
Exactly.
Yeah.
The second pain point was receivables protection and credit management. Of course, in this market, everything runs on credit. So it is essential to find ways to mitigate those risks. The third important thing was logistics on the supply chain, right? Because today, more than any other time,
Absolutely.
you can see the pressure that logistics, I guess you could say the break or the pause in the movement of logistics is impacting the entire economy. And finally, we also touched upon the importance of cyber protection, because like I said, as this digitization is coming into full force, as everybody's moving to digital platforms, AI, a lot of our information, a lot of our operations completely dependent on a system.
So this is initiated from Malakut, and we will ask now, what was the outcome out of that? So how many people out of the 10 we agreed? There are 2, but you said 7. I'm not in agreement with you. I'm still feeling it still remain 2. So out of all these initiatives helping the financial society, what was the outcome? Like how many you feel, again, we won't be able to stand in a correct and accurate statistics, but like the awarenesses, the question was, have you realized or like you measured that there are more people knows about this industry?
I would think so, because the event itself was more than, it was not a marketing tool for us, it was more of an event to provoke thought, right? And the outcome of that has actually proved itself in the way that we have actually managed to convert some people, some clients, or potential prospects that attended, into our clients.
Okay.
So I can proudly say that the efforts of the event have transpired and translated into us growing our books.
What about the breakfast?
The breakfast was purely a informational session.
Yeah.
It was just to show that we have these expertise and we're able to give a lot of perspective from outside people as well, specialists, people who are well versed in risk, so risk underwriters, people who are well versed in, let's say credit, so credit analysts. This is the kind of insight. So we are in the industry and we work on trade credit insurance policies every day, but my role is to develop business. My colleagues retain the portfolio However, when it comes to credit analyzation or credit analysis or risk underwriting, these are things that are more technical, and there are so many other people who are trained to do that.
Am I invited for the next breakfast?
Absolutely, Mr. Ayman. We can't have it without you.
Fine. Can I endorse this to my audience?
Absolutely, please.
It's a commitment.
Please go ahead.
Fine. So it is an invitation for the planned breakfast by Malakut to understand more about the credit insurance and to understand what it is has in terms of always there is pros and cons. So it is an invitation to my beloved audience, and you can take it forward, and I'm going to pass Vanessa's number to the breakfast. Fine. So we talked about the credit insurance. Let me ask more, like how big this industry, how many players in terms of a size and business, and let's zoom in the United Arab Emirates at least for the time being.
Mm-hmm.
So how big this industry in terms of a market share and how many players? Yes.
So if I go back to when I started in 2007, there used to be 3 players, 3 or maximum 4 players.
I'm talking
in
about
the region.
credit insurance.
Correct.
And you said region. So when you tell region, what region?
So I'm talking about GCC. Right?
Okay, yeah.
So at that point of time, we had 2 local insurers, Isaac and Tama. Okay.
So we will start talk about names. Hopefully everyone to be and remain happy. So this is history, and we're gonna explore this history from one of the leaders, and we will come to all these names, and we're gonna do the same because this is one of our initiative to pass it actually to the market. Fine. So you said back to?
So yeah, 2 big regional players, and then you had the 3 multinationals.
Mhm.
Okay, EULA at that point of time, now it's renamed to, rebranded to Allianz.
Yeah.
You had Atreides and you had Coface.
Yeah.
Okay, now as you see the market, it has moved quite a bit from 2007, fast forward to 2026. Today we have 8 or 10 or even more in the region. And with the increase of insurers comes the increase of structures, right? So that's why when you said 2 out of 10, I said 7.
Mhm.
It is purely because the market is evolving and evolving fast, right? Awareness is still a part of the sales process, but I think it's now educating and selling, right?
So we talk about how many players?
10, let's put it at 10.
Credit insurance.
Credit insurance.
Fine. So we appreciate all these credit insurance helping all type of category in the business within the United Arab Emirates, trying to cover their risk and educate them how to grow fast and safe. So this is more or less about, yeah, there was like a side of that question, like how big the market share?
Well, the market is
You said you start like with the 3, then you end up with 10. So what this market share about?
So the market is, I mean, it's hard to give a percentage. Okay?
No, it is just to give a taste and a flavor.
In terms of percentage, or in terms of numbers, or in terms of industry.
Whatever indications you got for us today.
Okay, I would say there's still huge potential to insure. I wouldn't want to
So
put a number.
we're inviting more credit insurance to the region.
Even if we don't invite them, they're all looking into this region because this is the fastest growing region.
It is. This is actually like I cannot agree more. And
Yeah.
if we look with all respect to any other territories and regions, and yeah, we see actually more business and more projects and so yes, more solution and more credit insurance.
Yeah, because if you look at Europe, Europe is very saturated at the moment in terms of growth. Even for the main
I like this comparison. Yes, please carry on.
even if you look at the main 3 insurers, right? The biggest 3 that control, I think, 75 to 78%.
Yeah, this is what
market share.
actually the TESA was after. So you're talking about like Allianz, Coface, Atradius.
Correct.
So let us say thank you for the big three and all the others, of course, actually to contribute to cover risk in this region. Let us jump into another layer. So credit insurance, to a certain extent, we know their names by now and how they work, and of course we what is the difference between the international names and the beloved Ittihad credit insurance, in your opinion?
I mean,
so there is
both-
local and there is international,
yeah.
yeah, global, yeah.
so every insurer, even if you differentiate between the global, they all have their pros and cons.
Yes, of
Yeah.
course.
Likewise, if you have credit insurance, they have their pros and cons too. Okay. So if any manufacturer in the region, in Emirates, looking to export, the support you will get from Etihad may not be the same.
So it is not about if it's a global or local, it is about the need and the category where it can meet their goals. So some category they would be perfectly to Ittihad credit insurance, some others multinational with some specialized need can be with some other of those global names. Fine, let us say that this is overall the credit insurance. Again, the credit insurance, we may just spend hours to deep dive, but let us stop it here. And audience, there is something called brokers in that credit insurance. So Vanessa,
Yes, Ms. Rahman.
how are you again?
Fantastic.
Excellent, fine. So after we explain to the audience the credit insurance in high level,
Mhm.
what about this industry called brokers, credit insurance brokers? What is their market share? What this industry, when did it established?
Great question. When it comes to insurance broking, especially with specialty line of insurance like trade credit, brokers have been there in the market for quite some time. Clifford was mentioning earlier to me that in the past it was mainly direct business and a very small portion was through the broker channel. However, the script has been flipped today, where there's about 20%, 25% that comes from the direct and about 75% that comes from the broker channel. What is the role of a specialist broker in trade credit? Our role, well, when we use the word broker, in fact, we don't really use that word, right? It's used very loosely because our role is more consultative.
Consultative.
Exactly.
Mm-hmm.
We first raise awareness from the business development side of it. So we really go down to the nitty-gritties and develop the business with the client. We explain the ins and outs of how credit insurance works, what it does, and how it could potentially help a business do two things: grow and mitigate risk. So these are the two important things that we highlight.
So it is look like to me starting with educational and breaking ice to understand.
Absolutely, and this can be, well, it's very visible, especially in our firm, because myself and my three colleagues in business development are technically the only salespeople in the company.
Mm-hmm.
Because this product requires a lot of awareness and education, like we've touched upon before.
I'm going to stop you here for a bit. Like usually, and my audience will agree with me, an average understanding, you know what doesn't mean insurance? Two things, main two things: car insurance and health insurance. And now, yes, it is very much a need actually to explain to me how this works. So today, take me as an investor or a corporate or a startup or like an SME, what do I need to know about? Since you educating and explaining and assisting me, so what major 1, 2, 3, 4, 5 I need to know today?
About credit insurance.
Yes. So take me as a client and
Okay.
explain to me.
Absolutely.
Simple bullet points in 5.
Okay. So trade credit and political risk insurance is the official title because it aims to do two things. It covers your commercial risks and it covers your political risk as well.
Interesting.
Indeed. The main criteria for any company to be able to have the eligibility for credit insurance is two things. One, the company must have been in operation for a minimum of 2 to 3 years.
2 to 3 years operation.
Yes, that's correct. And the second criteria is that they have a minimum annual credit turnover of $5 million.
Nowadays, most of everyone doing this average. Okay, so there is a big market share. What next?
Absolutely.
What more?
So when I say trade credit helps cover your commercial risk and your political risk, I will go into those 2 points now. Commercial risk aims to cover any kind of non-payment that comes from protracted default.
This is what main thing I'm experiencing for past a quite long 28 years.
Absolutely.
Because if you are not able to collect, you are exposed to bankrupt and insolve and so this scan to me the 1, 2, 3 and come back to that type of insurance or covering that risk.
Okay. So, like I said, commercial risk covers default for non-payment of any invoices. And political risk aspect covers any kind of export transactions you may do, where your buyer is situated in a country where there is some kind of government regulation, let's say devaluation of currency, maybe an embargo, an active political crisis. So maybe your buyer is able to pay you, but there are political circumstances preventing them from paying you back. So these are the 2 risks that get covered under a trade credit insurance policy.
Interesting, very much interesting. Why? Thank you. Clifford, why do I need to come to a broker, regardless Malakut or whoever, but I may feel, as an SME, as an example, that if I go to the credit insurance directly, I'm going to save time and cost. So why do I need to go, not to Malakut, I'm not promoting Malakut, but the concept of that broker, why do I need to go to broker and not to go directly to the insurance?
See, I can give you a long answer for that.
No,
But you want, I'll give you, I'll demonstrate to you. Okay?
Please,
the answer.
please.
You wear glasses. Remove them. Can you remove them? You can see, right?
Yes, of course.
Now put them on. You can see better. Correct?
Yeah, yes, Dr. Clifford.
So, very simple. We are your glasses.
Okay.
This is a very niche product. It's a specialized product. And most of the work that is done is after you buy the policy. So there are fine prints. Now when you put on your glasses, you can read the fine prints. So we are your glasses that help you to read the fine prints. That's 1. 2, there's a lot of activities or work that has to be done after you sign the policy, like credit limits. In case you do not get your credit limits to the amount you're looking for, we have to appeal, we look after that. There is a claim process, there are educational processes, training processes. So this is what is our role as a broker. But in short, we are your second pair of eyes.
I've got different type of audience today with us in the DebtCast. And what you mentioned, yeah, I do know all of it. But I need to simplify it as I'm a voice of the audience. Today, as small, medium, large, I know that large and X-large, they got a space and a budget to put experts to take this process you've mentioned to me.
Mm-hmm.
Now, if I am an SMEs or these normal category, which is actually the majority of the market share, till I understand what you explained to me, I will not digest it, and even if I digest it, I will not be able to take all these milestones. The entrepreneurs, the SMEs, and all those. If I understand you well, so you are look like to me like their advocate. You advocate their rights, and you explain to them, and you take their hand from A to Z. Is this what you're trying to explain?
Exactly, because it's quite a complex.
Yeah, exactly. No. Here, complex. Yes, it is, and this is actually the reason, because one of the very much important goal here today, it's not any commercial more than I need the SMEs, I need to entrepreneur, I need the investors to know more about these type of the availability of these type of solution in this region.
Yeah.
So if I'm as SMEs today, I'm not interested actually to understand deeply. And even if I tried, I cannot put all these hats. I'm the investor, I'm the accountant, I'm the lawyer. So are you telling me that you sit with me, take me as an entrepreneur today, and I've got the criteria Vanessa sent to me, the 5M turnover and the existing for 3 years you mentioned to me. So I met this criteria, and I'm doing good amount. So since I'm doing this turnover, I'm getting good amount of business.
Mm-hmm.
So explain to me now the milestone. I came to you. What and how can you not only educating me, because with whatever education, I will not be an expert.
Yeah.
But you would explain to me the high level of it.
Yeah.
Fine. But shall I understand that I need to depend more on and trust their opinion, how they drive me, and what the broker to work, and what size and what limits with the broker. So is this the main goal of the brokerage rule in the market?
Yeah, as I mentioned, yeah, it is very complex. And let's go back one step, right? Why do you take credit insurance? Right? You take credit insurance for various reasons. One of the reasons is risk mitigation. Okay, so if by chance you have a default or there's an insolvency, okay, you need to be paid. Okay,
It is very much important. So it is to cover and protect.
Yeah.
So in case of that thing happen, which is happening from time to time, and it is part of any business transaction. So the audience need to know that even if that thing happen, there is actually a protection to that.
correct.
Carry on.
Yeah. So, and this is extremely important to have an advisor. So we act as advisors, right? So if you, for example, have taken it for risk mitigation or financing, we actually, throughout the process, ensure that you're utilizing the policy for what you've taken it for. Sometimes you could take a policy and not know how to use the policy.
Would you just simplify it in a milestone, 1, 2, 3, 4? So I'm an SME, I came to you, I am within the criteria, and of course I need to protect all type of risk. So what are the milestones, the onboarding and the journey look like, but in a simple 1, 2, 3?
Okay, so let's start from the onboarding journey, right? You've signed the policy, okay? So
No, let me put it in this way. I am an SME, I came to you and within the criteria, and I got business 1, 2, 3 for buyers, I mean. So what you would ask me, and what do I need to bring you, and what's the journey milestone?
okay, so when you take credit insurance, you get a portal from the insurer, when you apply for a credit limit, you don't need any documentation at all.
Mhm.
All you have to do is go onto the portal, apply
Which
for
portal
the insurer's portal.
means?
So the insurer has a portal which they'll give you, okay, where you have to apply for a limit.
Okay.
Okay. Once you apply for the limit, it goes to the underwriter, which is in the insurance company,
Mhm.
okay, and they will provide a decision for you. Okay. So this is what we will do when we train you at the time of implementation. However,
So still I need to go to the insurer?
no.
Fine.
This is all on the portal, the insurance portal.
Yes.
Okay. And you asked about documentation. You really don't need any documentation at that point of time, right? It's only if you do not get the limit that you have requested for, then we as brokers will come back to you, okay? Ask you either for audited financials, we'll ask you for the finance manager's details, and we will appeal the limit with the insurer and let you concentrate on your day-to-day business, okay? And we take up that responsibility to ensure you get the maximum limit for that particular buyer. So that is one of the things that we do, yeah? The other things that we do is market information, which is very important, right? If we know this, that there's a buyer that is facing any cash flow issue, there's a possibility of a default in the near future, and you have to, then we advise them to, reduce their trade, reduce the payment term. We are always advising our clients as to what is the right way to approach the particular buyer that is facing cash flow. So that is also one of the steps that we do.
So today, as one of the SMEs, I'll come to the broker and they will educate me and explain to me in high level. And still as an SMEs, I need to go to the portal of the insurer and I need to upload the basic 1, 2, 3. And we will go to the limit and the underwriting process. And still you will be with me to appeal and to help me understand more. And furthermore, you mentioned that the receivable and the book of mine. Fine. Now, what challenges out of your experience in the market the SMEs usually face in this milestone? The very much common one.
The very much common one is in this region, in the
Yeah.
GCC. One thing that we, let's say, not lacking, but it is difficult to get is access to buyers' financials, right? Especially when it comes to the underwriting process. Because, like Clifford said, when you apply for a limit on the system, it has to go to an underwriter to either accept the limit, give a partial decision, or they reject the limit. There's 3. Why does a rejection happen, or why is there a partial limit? Mainly, sometimes, it's due to the fact that there is lack of updated financial information. And access to this financial information is scarce. Of course, now with the implementation of corporate tax and VAT, it's becoming a lot easier. People are more willing to give us their financials or give the underwriters the financials. So it's becoming a lot better. But this is the challenge when it comes to, especially when companies are dealing with the bottom line of customers, because their financials they keep very close to themselves. It is like pulling teeth, almost. This is not the practice in, let's say, the West, so in Europe or America, because we see even in this region when we're applying for our clients' buyers in those regions, so like I said, Europe and America, it's a lot easier to get a decision and an approval because access to financials is available readily.
Interesting.
So this is one of the main challenges that they face when getting credit insurance in the region. But it's rapidly changing and improving. So that's a good thing.
Have you done any sort of like solution out of the box to come out of this challenge? Or usually what?
So when we are facing an issue with a client getting a limit on one of their buyers and they don't have access to financials, we often advise and we ask them if they are willing to share the contact details of
Interesting.
their
Okay.
buyers. So I'll give you an example without naming names. A client wanted to get an increase in a credit limit for a short period of time because seasonal business for a very large local conglomerate. Now, the thing with large local conglomerates are they will not willingly share their financials with anybody. However, upon us intervening and getting the contact details of this large conglomerate and having a conversation with them, they advised us that we are very happy to invite the underwriters to our office and show them our financials in person, and that's about it. They can make their decision from that point on. So we facilitate these kinds of scenarios, these kinds of events in order for the underwriter to get the comfort that they need to underwrite the limit while supporting the client at the same. So this is kind of what we.
Common.
This is how we
Overcome
these
common
challenges.
challenges.
Yeah.
Thank you, Vanessa. Back to the audience. We started with the supply chain from the receivable to collection, legal collection, cross-border, and the advisory part of it. And we said there is an advanced supply chain for 2026 in AWH where we believe more in 3 elements prior to the supply chain we created over the period of time, which is the information. So I learned today that information, one of the thing appears through this dialogue with one of the experts, brokers here, the information, which is one of the advanced supply chain, and the credit and the insurance. So there are 2 things here, like let us narrow down the information, and I believe not within this cast we will be able to talk about the information, and we will see how these type of information, and we will see the role of Ittihad Credit Bureau and the top relevant suppliers information in the region and globally. So this is a big topic. We promise to get back to this topic. But there is the very much important element, which is what you've mentioned, and I'm going to just read this now to Clifford. The books and how clean the books is, and for 2 parties, the seller and the buyer. So what does it mean a clean books? Means receivable of like 30 days, 60 days, 90 days and above. To what extent this, if there is a delay within the receivable, it would affect the limits and onboarding and to be qualified in the first place to get that policy?
Okay, one of the things that we look at when we are onboarding a client is aging. Okay, but it doesn't really matter whether it's good or bad. Okay, if it's a very good aging, you might question, why do I need credit insurance? Right, I'm doing everything perfect. Right?
It is a message for those people doing good. They need to listen to this piece of information.
And on the other side, if the aging is bad.
No, I try to explain, but I'm an entrepreneur and my books is quite good. So what is your advice here?
Okay. The advice, of course, is very important. Risk is always evolving. You need to mitigate your risk. How do you mitigate your risk is very important, right? So, having a clean book is good. You'll get better terms, better conditions, right? You want to grow. Every business
The
wants to
other
grow.
side of the story, if it's not a good book, means delay in payments.
Correct.
So how this would reflect. So the first one, it is an advice. Even if you're doing a good business and you feel it is stable, there is a built-in risk. You need to discover and you need to educate yourself about to mitigate and predict and mitigate and manage at a later stage. So this is a first important message. Now the second, when we come actually to the default risk. Now the second, there is a delay in the books. I came with you with my books is not the best books. So what is your experience in that?
Okay, and for me personally, as Clifford, these are the companies I like to advise and help.
Yes, sir, please.
Right.
Because this is my our expertise and our market. Because debtors, they are not criminals. Debtors, they are normal people like us. They couldn't fulfill their financial obligations. Due that they couldn't collect. Now we're linking this to the credit insurance solution and how much this would affect. So if I came today with you with a book, it is not something like good. What does it mean good, very good, excellent in your experience? A financial book.
Okay, so we look at the receivables. I think anything where it is pending 60 days after due date is a concern for us. Yeah. Now, when we see that and we see the aging, okay, this is when we go to an insurer, and of course, it's pleasing for our eye, but not very pleasing for the insurers, because an insurer would always love a clean book, right? However,
Less risk for them, it is very much normal, but yeah.
for us, we look at a company that's aging is not the best. That gives us an opportunity for us to help him to ensure that we can bring down his aging to a manageable level, right? And this is where we advise them that credit insurance, okay, would be really helpful for them. Okay, how would it affect the terms and conditions? So if your aging is not the best, your cost and your deductibles will be a little higher as compared to a person who has a cleaner book. But yeah, there's a lot that we can do to improve your aging, which is very interesting for us, and you learn a lot on how we improve your credit controls and processes along the way.
But today we talk about even the cost of default. The cost of default gonna cost you a higher premium in your insurance policy. Of course, beside many other elements. So, as an expert in the arena of the collection and the default risk, it has a very much link to get limits, to get competitive policies premium. So this is how important is the full-fledged credit risk supply chain. So managing the receivable in different ways, and managing the debt collection and the legal debt collection and the cross-border collection. So this is the bridge, in my opinion, with the credit insurance and with the brokers as well. Interesting, and I'm happy that building and demonstration how actually connecting these dots together. Okay, fine. Let me know a bit about, thank you, Clifford. After we get the approval and we get the limits,
Right.
I would be happy to go to the market, as Clifford said, to grow and expand with confidence. But as I said, he said he put it in a statement that some of the portfolio won't get paid. And I said, it is not some, it is more than the sum. So the portion of expected default, it is bigger than a word of a sum. So you helped me, educated me, you appealed, and then I got the policy, I get confident, I get to the market, I start transaction, and there is a considerable, so you said some, I would say considerable percentage of default. At the time of the default, The credit insurance, they're going to get the hit. Where's the broker's rule here?
It's a very good question, actually.
I'm always asking very good questions.
Absolutely, without a shadow of doubt.
No, I'm just kidding.
No,
Yes,
it's true,
please.
it's true. So, when...
You know, I'm going to stop you here. There is a misconception that, with all my respect to whoever within this industry, that the insurance company and even, as I said, like car insurance and health insurance, but today we talk about something bigger than this. You know what actually the most of the audience would think of? The insurance, they might try to find a reason not to pay.
Yeah.
So let us just put it bold in this way. And from here, you helped me, educated me, I went in confidence. To what extent in reality I'm covered?
Okay. So, like you said, for medical, for motor, for property, there is this notion that insurers will do whatever in their ability to not pay and find something in the, in the contract, a loophole in the fine print to decline a claim. However, that is not, from what we've seen anyway, this is us strictly speaking about our portfolio.
I would like to take your existed experience to pass it to the audience. Is this right? Is this the true? Or it is just like a misconception?
See, we have a cross-section of about 200 clients today, right? And what we've seen is when a claim is submitted, it has very rarely, I can't remember a time where we've faced a straight-out rejection where we haven't been able to appeal the decision. Right?
I'm going to cross this with Clifford.
Please.
Tell me, Clifford. So don't tell me not a single rejection.
I mean, we all human beings, right? There will be an oversight.
Oversight, yes, carry
Yeah.
on.
And of course, there will be a rejection, right?
Excellent.
However, as brokers, because of our relationship,
Okay.
because of our technical knowledge,
Technical knowledge, yes,
Yeah.
very much.
we find a way, we find a solution with the insurers to pay the claim.
Okay, so it is not something common.
It is not, okay, let me put it also this way, right?
Yeah, please.
It's such a niche product where we are actually aware, educate, sell, right? And after this whole process that may take anywhere, the quickest is 6 months to 3 years, they take the product, then insurers reject a claim. There's a question of reputation, there's a question of the word spreading in the market. So I honestly believe that claims, unless they cannot be overturned, will be paid.
So can, as an expert, pass to the audience, it is not in reality and out of your experience that the insurance will try to find a reason not to pay?
No, that's
So-
untrue.
Untrue.
So they will never find a reason not to pay.
But there is
But
technical
there- yeah.
there is appealing and there is experience and
Exactly.
will you confirm the same?
See, exactly that, because sometimes there are very strict guidelines and timelines in credit insurance, and the insurer does reserve the right to reject a claim if certain reporting timelines are not met, right? Which is fair enough, because that is the basis of the contract.
As this educational message and session and cast, there is a lot of misconception in the market, and sometimes because there is not enough education, those misconceptions became like a fact, which is not a fact. Addition to what experts here today shared with us, Clifford and Vanessa, I would add that there is a regulator. And the regulators in the United Arab Emirates and any other region will not let this happen. There is rights, and no one can play around with these rights. So from here and from this cast, it is not the reality. It is just something being built over the years and it is not right. So,
Actually, I mean, that's a very interesting statement you made, because regulators, right? So if a claim is rejected and they really believe that they've done nothing wrong and they've done everything as per the claim process, they can go. And if you look at the number of cases that have gone to the regulators, you can actually count them on your fingers.
we are in this industry and all what I mentioned, not to repeat again, but we work closely with our law firms, and I don't remember there was a valid claim, and even without going to the courts and the litigation or the arbitration, all Ministry of Finance and all relevant consumer protection, if it's but not in a corporate level, we will look with some other regulator. They will, beside that, the broker will help them, but the regulator will not this happen. Fine. Thank you for the regulators protecting the corporate and the individual interest of the society. We talked about insured, but there is no way that any company would insure the 100% portfolio. Out of what I went through, that there is quite reasonable percentage, but always there will be uncovered and uninsured portfolio. So if I said a category of uninsured or unqualified files due to the buyers or over trade, or sometimes financially it is not feasible, this portion, what is the solution for it? Because you are a broker, you said advisory, so this part that is not within the credit insurance, so it need a complement service.
Yeah.
In your opinion, what?
So it depends what part of the insured portion. Why is it not insured? Okay, is it because the buyer is defaulting? Is it lack of information? Okay, so we have to understand the reason.
Mm-hmm.
Okay, once we understand the reason, there are other solutions. As I said, credit insurance is evolving. There are single risk structures now available.
Mm-hmm.
There's specific buyers, projects that can be insured. So yes, we look for different solutions, different structures for them. And just in case we do not find a solution, then we work on credit information that is required and provide to them before they make a decision to actually trade on credit insurance. To trade on credit.
Yeah. Fine. And addition to that, and from my experience, for these categories, the overtrade, the uninsured, I believe this is very much normal, by the way.
It is.
And buyers not qualified, files not qualified for some certain buyers, or financially it is not. So the complement service and solution as an advisor today, I'm part of this. I believe the debt collection and the legal debt collection and the cross-border debt collection and the receivable management in first place. The receivable management, it is actually something, the root cause. If you manage it well, you will have less collection, less legal collection, less cross-border collection risk. Fine. We will conclude with what's going on. What's going on, it is something well known, and of course I'm talking about the geopolitical tension. Geopolitical tension, it is something affect directly to the economy and affect to our domain, which is all type of default risk and its solution, and to the brokers and to the credit insurance. And here we don't want to talk much on it because it is known very much and everyone looking at it from different perspective. But today I would like just to highlight the very much acknowledged and appreciated government initiative. And you can see completely different, upgraded way, advanced, if I compare it with the COVID as an example, though it is not apple to apple or even not comparable. But when we link this to the economy and link the economy to the credit and the broker and to all type of default risk, these initiatives, to what extent we saw and we know, and we do want to repeat something known, how much the government in the federal level and in local level and all Emirates have put initiatives. So to what extent this, in your opinion as an expert, would help and link to the credit insurance? Vanessa, starting with you.
First and foremost, we are lucky and we are proud to be in the UAE amidst the current situation. We thank our frontline heroes. We thank our leaders for keeping us safe in tough times like this. And the first thing to do would be, of course, appreciate the initiative of such a relief that they have injected into the economy, especially in the banks. So based on that, of course, an injection of cash like this, it will definitely help keep the cash flow going, because right now cash is king, right?
Mm-hmm.
Everybody needs that. They need that working capital to keep their business continuity so that things don't pause. So this definitely does help businesses. However, down the supply chain, right? So buyers will tend to, of course, prioritize payments.
Yeah, I would like, I like what you said. So put it in a cluster. So government initiative and linking actually to the sell and buy, sellers and buyer. To what extent this is helping, in your opinion?
Like I said, it will help because the access to cash, the access to cash flow helps people pay off their major suppliers, their biggest debtors. But down the supply chain, the smaller ones, they might tend to get neglected because obviously priority is the top for any company, right? So, I mean, obviously, I would also pass this on to Clifford because he also can touch upon this.
Yeah, during every crisis, there's an opportunity. There's, businesses to be handled well and smoothly. So, with such initiatives, it is great because cash flow is affected for sure, 100%.
She said, king. Cash is king.
King. Cash is king, yeah. So, but yet, you will have companies that will face slower payouts, which means, there will be defaults, okay? Maybe not immediately, but this will come, okay? This will.
So, Clifford, talking about waves, which is normal in any financial crisis in the history, economic history. So yes, it is happening today, and it may affect in a year, 2, 3. So this is a very much important fact to address. Yes, please.
Yeah, and this for us in our industry, okay, we will see the demand rising, right?
Demand rising.
For credit insurance.
Interesting.
For people who have not yet insured their receivables, they'll be looking to see for solutions, and yeah, that's where trade credit comes in.
Thank you, Clifford. Back to the DebtCast. Last statements of 2 experts if cash liquidity and default risk delays in payment, how much it is affecting. And it is very much simple equation. As much as you collecting and you would reflect in a healthy book, you would be able to have an access to a good protections and coverage out of many type of risk. One of it geopolitical or the other risk, the commercial you mentioned. So back to the DebtCast and to conclude and close statement. Cash, I understand they said king. Liquidity and collection, it is king as well, and it is a vital in any financial cycle and operation. And all these solutions are really connected. DebtCast by AWH is really taken this responsibility to connect the dots. So it is not only collection and legal collection and cross-border. Before that, there is credit insurance and brokers to know, and we will touch base in some other cities about the credit, how to give the credit. Is it like 100,000 or 100 million? And when you call back this credit, and what parameters and triggers you need to keep in those credits. And of course, we will touch base the information as well. I would like to say what we're going on in the geopolitics. It has positive and negative. It has pros and cons, and I can confirm on a personal level, it is not the first and it is not the last, and this is how any economy usually goes. Vanessa, thank you very much for the time and the information you passed to the DebtCast audience.
My pleasure, Mr. Ayman.
And we will be very much looking forward to talk about some other topics, and I'm re-endorsing your commitment for the breakfast.
Absolutely.
Thank you. Clifford, thank you. You seriously added a lot of value and helped the DebtCast by AWH to connect the dots and to see a bigger picture. So it is not only credit insurance and brokers, and it is not only law firms, and it's not only collection and all these things. It is a combination of all of it and need to be connected, and we need, as we got a corporate responsibility to pass it to the audience and explain who we are and what type of strong protections and initiatives we got. Thank you. Thank you.
Thank you. Thank you, Ayman.
And
Thank you.
Before we close, and to take one more important thing to my audience, if there is one important advice, especially at this point of time, what would be to the audience today?
Okay. So I'll break it down into the insured portion of the corporates and the uninsured portion. The insured portion, we would advise them to reduce their exposures if they're not utilizing it, bring it down to the minimum, do not extend any payment terms, try to keep things status quo until things calm down a little bit. And for the uninsured portion, it's not too late to get insured, because like you said, this is not the first time, and this will certainly not be the last time. Crises will come up, but it's better to get insured so that if and when something happens in the future, at least you have that layer of protection there.
Thank you very much.
My pleasure.
I would ask the audience just to put it and write it down, because this is something out of a vast experience and any ground experience. Clifford, if there is an advice to end up this great cast today,
Yeah.
what would be?
I mean, I'm sure every company wants to grow, yeah, but there's a time for everything. I think during a crisis, you have to pause, you have to be conservative. Bad times never last. So I think wait, watch, and then continue to grow.
Thank you, Clifford. Thank you, Vanessa. And thank you, the great audience of the DebtCast by AWH. We still committed, and there is much to come. Thank you.